Hello and welcome to our video on the 2008 global financial crisis. This crisis had a significant impact on the world economy and is still being felt today. In this video, we'll be discussing the causes of the crisis, how it impacted the global economy, and what measures were taken to try to mitigate its effects. There were several factors that contributed to the global financial crisis of 2008. One of the main causes was the subprime mortgage market. In the years leading up to the crisis, banks had issued large numbers of subprime mortgages to individuals with poor credit histories. These mortgages often had adjustable rates, which meant that the monthly payments would increase over time. Many of these borrowers were unable to make the higher payments and defaulted on their mortgages, leading to a wave of foreclosures. The crisis was also fueled by high levels of debt. Many financial institutions had taken on large amounts of debt in the years leading up to the crisis, which made them vulnerable to financial shocks. Finally, lax regulation played a role in the crisis. In the United States, regulatory agencies had failed to adequately oversee the financial sector, which allowed risky behavior to go unchecked. The global financial crisis had a significant impact on the world economy. It led to the failure of several large financial institutions, including Lehman Brothers and Bear Stearns, and sparked a global credit crunch that made it difficult for businesses and individuals to borrow money. The crisis also led to a global recession that lasted until around 2009. Many people lost their jobs and businesses struggled as consumer spending and economic activity slowed down. The crisis also had a ripple effect on other countries, as global trade and financial markets were disrupted. In response to the crisis, governments and central banks around the world implemented various measures in an attempt to stabilize financial markets and stimulate economic growth. One measure that was taken was bailouts, where governments provided financial assistance to struggling financial institutions. This was done in an effort to prevent a collapse of the financial system. Monetary and fiscal policy easing was also implemented. Central banks lowered interest rates and increased the money supply in an effort to stimulate economic activity, while governments increased spending and reduced taxes to boost demand. In conclusion, the 2008 global financial crisis was a major event that had a significant impact on the world economy. It was caused by a combination of factors, including the subprime mortgage market, high levels of debt, and lax regulation. Governments and central banks around the world responded by implementing various measures, including bailouts and monetary and fiscal policy easing, in an effort to stabilize financial markets and stimulate economic growth. Thank you for watching our video on the 2008 global financial crisis. We hope you found the information helpful. If you enjoyed this video, please don't forget to like and subscribe to Curious Theory. We appreciate your support and look forward to bringing you more informative and educational videos in the future. Thanks again for watching.